All right. So thank you for joining me for this educational presentation, which is about how to be 80 to 90% certain of a positive outcome before and after you take a position in any market, guaranteed. Uh, this presentation is going to be quite a bit different from anything else you've probably encountered because no other system or strategy that I know of delivers the level of certainty that my method guarantees. And so, let me ask you this, does this sound like you? Do you experience uncertainty before and after you enter a position? Are you hitting your stops more often than you'd like? Do you experience large drawdowns? Do you have the hit or miss performance experience, right? It's roller coaster experience instead of consistency. Do you have an inability to consistently grow your account every single month, no matter what you've tried? If so, this is the topic I'm going to address today, and I can fix that for good for you once and for all. That I guarantee. And if any of you have heard me before, you know me. You also know if you've looked me up, I just don't disappoint. I deliver on what I promise, and I have a track record of 12 plus years of doing so. So I think you're going to find this very refreshing. So this presentation is pretty much for you if you're ready to achieve very low risk positions, low to no drawdowns. We're talking just 2% or less downside risk exposure per position. We're talking about high win rates of 80 to 90%. And also, we're talking about eliminating 80 to 90% of bad trades before you pull the trigger and give back your capital. And we're talking about trades that look good on the surface, right? But that end up struggling and failing. So you're going to eliminate 80 to 90% of that experience. We're going to talk about accelerated account growth with consistency. And you're going to do that by getting a level of certainty through the clarity, the confidence, the consistency, and the control that this provides. Now, let's begin with the biggest obstacle to long-term trading success. And actually, before I do, I'd like to know from each of you that are joining us right now, what you believe the biggest obstacle is. So if you don't mind, please type in the chat field what you feel has been the biggest obstacle to your trading success long-term. Okay, go ahead and type that in the chat right now, please. Again, tell me in the chat what your biggest obstacles to trading success have been for you. This is something I'm really curious to see what you guys say. All right, and while you're typing your response to me, all right, I'm going to give you a second to do that. For those just joining us, I'm obviously Roger Khoury. I'm the founder and CEO of Market Forecasting Academy and the developer of Demand Imbalance Arbitrage, which I'll be covering with you today. But for context, it's important that you know that I'm like many of you. I started my trading journey by shelling out large sums of money to well-meaning gurus, only to be disappointed again and again. No matter how hard I tried, nothing ever lasted. Now, this doesn't mean I was necessarily taken by anyone, but as you'll see that even the professionals themselves are victims of the very thing I had to overcome on my own. So each time I thought I finally found what I needed, it somehow ended with yet another disappointment. So I kept finding myself constantly looking for the next new thing that seemed to be working at the time. And that turned out to be this endless cycle, which many professionals say was just the nature of the beast. But after 14 years and spending more than $300,000 on education and on systems and in tools during that period of time, I had to admit to myself that I was not much better off than when I first began. Now, I may have learned a lot, but what I learned wasn't really getting me anywhere. So the value really wasn't there for me. Now, this started me on a journey, which ended up with me discovering a completely different approach to the markets. And once I fine-tuned it, I was finally able to accomplish the goals I set for myself through the markets, and that led to having a lot of free time on my hands. Now, I have to say that I never intended on teaching my methodology or turning it into a business, but people around me started noticing that I had a lot of free time on my hands, and they started to ask, what do you do? And when they found out that I had a very controlled approach for being consistent and outperforming the market without taking big risks or holding on to large drawdowns, it naturally piqued people's interest. And that's when people began to ask if I'd be willing to teach them. And I remember how rewarding it was teaching Sunday school. So I was like, sure, why not? Actually, it started with a lady at church. She's like, can you teach my son during his summer? He just graduated high school and I don't want him wasting his time, partying, and, I want him to be productive. And so that's kind of what started the whole thing. And there was a ripple effect from that. So from there, it kind of just snowballed. And today, 12 years later, 90% of my clients come from word of mouth referrals from existing clients. And I think that statistic alone will tell you a lot about what you need to know. But for now, you can relax and really focus on taking in what I have to share with you, because there's nothing to buy at the end of this presentation, but I can guarantee that it will prove to be the most valuable information you'll hear all year. So back to the question I asked about your biggest obstacle to long-term trading success. Let me see what I got here in terms of some answers. So timing my entrance, very good focus there. Lack of a very good system, fine. Finding a methodology that makes me money on a consistent basis. Okay, every time, and I want to know how to enter and exit on a timely basis. The volatility, fear. Okay, fair enough. Now, these are all valid responses, but they all tie into a single core obstacle that causes all these other problems you mentioned. And so when this obstacle is finally dealt with, all the other problems automatically go away, okay? Now, the single biggest core obstacle to trading success is uncertainty. Uncertainty is the ultimate killer to trading success long-term. And it's the uncertainty about what price is going to do next. It's the uncertainty about whether or not your position is going to reach its target before you have to pull the trigger. It's uncertainty about whether conditions have changed after you're in the market and what to do about it, right? Uncertainty causes doubt, fear, and stress, right? Because it's the unknown that drives your fear. I don't know what's going to happen. That's why I'm fearful. And this causes you to behave in risky or self-sabotaging ways. So if you're trading with uncertainty, it's a roller coaster ride, no matter what strategy or system you're using. It's exhausting, and it's always going to lead to inconsistent performance results, which you can never rely on. So if you can't eliminate the uncertainty altogether, you'll never achieve long-term trading success. You understand that? No matter what trading system, no matter what trading strategy or signal service you use, because you're always going to be uncertain about what is going to happen next. And by the time you find out, it's often too late, unless you can overcome what I call the 3 causes of uncertainty. And the very first cause of uncertainty is relying on lagging indicators. Have you ever realized that price itself is a lagging indicator, which means any other indicator derived from price, like RSI, Bollinger Bands, moving averages, name any and all the traditional indicators that come on a chart, right? Whatever that comes to mind. They're not only lagging, but they're even more disadvantaged than looking at price action itself, because again, price itself is lagging, and therefore the chart indicators are lagging even more, since they're all based on the past. Now, how can you ever have certainty about the future based solely on past information? You can't. Demand is the true leading indicator, because price always follows demand. Think about it. What causes price to rise and fall in any market? It's demand, right? Price will always ultimately reflect where the demand is and where the demand is expanding or contracting. But how do you identify real-time demand so you can be ahead of the market instead of being victimized by it, right? We all know the market's manipulated. So if that's true, shouldn't we take that into account? So this brings us to cause number 2 for uncertainty. And it's about not having a complete picture of all of the objective data that you need to consider to identify real-time demand in any market. We can't have anything that's subjective, okay? Subjective to your interpretation, to her interpretation, to their interpretation. We all have to be able to look at the same thing and all agree, yeah, that is what it says it is, right? So this simply means that you have an incomplete picture of what's going on. And that leads you to trading blind. Now, did you know that there are 8 major demand factors that move price? Most people only use 1 or 2 of them, like fundamentals and technical analysis and their little subsets. But there are 6 more major factors that they aren't accounting for properly. And then they wonder, hey, why they got surprised and blindsided by unseen forces in the market. So let's cover those 8 major demand factors. First, you've got fundamentals. You've got geopolitical forces, and that includes central bank and macroeconomic effects. You've got volatility and the different phases and the shifts that it goes in and out of. You've got market sentiment. You have liquidity levels, which includes volume, as well as order flow and trade flow. You have what I call prime liquidity pools. And these are pools of liquidity that essentially are available and obvious to a broker, a market maker, an institution that has clients such as Goldman Sachs, where they can trade against their own clients, admittedly. And so they're able to manipulate markets within those prime liquidity pools. And once you know how to identify them and where they're at, suddenly getting whipsawed or getting spiked out or getting stop hunted become a thing of the past. That automatically just goes away, right? Because you can take that into account. You know what they're seeing, and so you can be outside of that. Okay. You've got imbalances itself in supply and demand, and then you've got, last but not least, technical analysis factors and its effects on the market. And this takes into account and replaces most of the useful technical indicators that people are used to using, including Fibonacci, Elliott wave, and even Gann. All right. Now that seems like an overwhelming amount of information to track, right? Actually, it's not. I've combined all of these demand factors into a simple, visually intuitive indicator, giving users a leading real-time demand indication. So you always know where price is going next with an 80 to 90% accuracy. In other words, having an 80 to 90% statistical probability of being right. Okay, think about being right 80 to 90% of the time. So I'm going to show you how simple and yet how powerful it is at the same time. Let's look at the stock of Tesla, since many people like and follow Tesla. Down below, towards the bottom of the chart, represents all the 8 major factors I just mentioned to you and their combined impact as real-time demand in the market. Now, what I'm showing you is going to be an oversimplified view of how to apply this form of analysis, because it's not just an indicator, which happens to be leading in nature, but there's also a process of how to correctly interpret what it is telling us in order to produce the accuracy that my methodology is known for. But the simplified point I want to make here is how visually intuitive it is. Okay, so you can see that it's nothing overwhelming. All right, so let me get my trusty laser pointer here. And I want you to notice here, look at where price was here to the left. All right, and then as price moved up, retraced, and then comes back up to retest some of these highs over here. Okay, so I've got this little turquoise line kind of angling up. So let's now mirror that down below. This is my real-time demand indicator, if you want to just keep things simple. Okay, demand. Okay, if you notice, this represents demand where it was when price was here. Okay, price goes up, price comes down, price goes up again. But look what happened here. Demand goes up and demand comes right back down to where it comes back a little less than where it was previously when price was over here. In other words, keeping things very simple, when price went up to retest these highs around 1,000 plus level in Tesla, okay, at the price, demand was a little less than when it was in the 700s. So right there, you can see it's a visually intuitive indication that says price where it's at now is unsustainable. Demand has shifted significantly below down to the 700s. And so that is a leading indication that price must correct to catch up to where demand is, because price is always doing what? It's following where demand is, right? So whenever it kind of goes beyond, it cycles in and out of demand. It's always in and out of balance. Sometimes it overshoots. Well, it overshot here, okay? And that represented almost a 30+% drop in the market. Well, you knew that while you're up at the highs. How valuable is it to know that when I'm at the highs, that demand has shifted 30%, right, below where price is? That's forecasting a 30% correction in the price. Okay, you guys beginning to get a little bit of an aha moment there. This is how I've been, for those of you who have followed me, you've seen me over the years consistently forecast in front of a live audience before and after significant market corrections and crashes consistently, right? You don't get surprised by a market crash or a correction anymore, because not with this, not when you have real-time demand analysis. So this is really critical for you to understand, okay? Now, this moves us into cause number 3 for uncertainty. If you've ever wondered why a strategy or a system seems to perform well for a while, but then it always eventually falls apart no matter how diligent you are at sticking to the rules, so no amount of discipline in this case can even help you, and that's because no matter what system, strategy, or signal service you use, they're all subject to something I call the fatal flaw. Okay, the fatal flaw. And it's unavoidably baked into every strategy, system, and signal service you'll ever encounter, no matter how simple or complex it is, and no matter how cutting edge the technology behind it is, right? Even if it's AI. The reason is simply this. Every strategy and approach to buying and selling in the markets are necessarily developed based on the current and previous conditions in the market. Okay, and when those conditions change just enough, as they always do, then suddenly those conditions are no longer favorable to whatever approach you have, and your strategy or system will start to perform inconsistently, poorly, or not at all. Okay, this is what causes people to endlessly keep coming back to the point where they feel compelled to search for the next new thing that's supposed to be working now. This perpetuates the common experience of inconsistency, uncertainty, and fear. Now, with that in mind, you know what the 3 underlying causes of uncertainty are, right? So to summarize, these are relying on lagging indicators, not having the complete data to provide total objectivity to identify where the real-time demand is at every moment in the market that you're looking at. And lastly, it's dealing with the fatal flaw that's inherent in all the systems and strategies that you'll ever use. So let me ask you this. If you could eliminate the uncertainties in any market or time frame, and we're certain of a favorable outcome 80 to 90% of the time, how would that change your experience? Would you be less stressed, more relaxed, and confident? Would your trading results be more positive? See, when you know when and where the odds are stacked in your favor versus when and where they are not, that changes everything, folks. For your ability to be confident about your actions, to be successful, and to do so with consistency. So confidence and consistency go together, okay? Confidence and consistency. And that brings us to the one skill that permanently eliminates uncertainty, which is learning how to accurately forecast future price action based on accurate real-time demand. Because remember, if you know where the demand is in real time, then you also know where price is going and what it is going to do next. Because demand moves first, then price follows after. And the simplest and most profitable way to trade the market is by identifying when and where there are significant imbalances between where price is and where the actual demand is. The key is having a significant imbalance, by the way, which happens all the time throughout each and every week. And this provides you with frequent, low risk, high probability opportunities for profit. And I call it demand imbalance arbitrage. Demand imbalance arbitrage, which is an innovative, industry-first methodology that eliminates the uncertainty, the inconsistency, and large drawdowns traditionally experienced in the financial markets. And it's the only method guaranteed to consistently identify and take advantage of frequent, very low risk pockets of significant imbalance between price and demand, like you just saw in Tesla, right? There was a significant imbalance between where price was and where the demand was, right? 30% difference in that case. And where you're able to profit from those imbalances 80 to 90% of the time. In other words, your analysis will be objective and will be right at least 80 to 90% of the time. Think about what it would mean to you and how you would feel when you knew your analysis of what the markets will do is going to be right at least 80% of the time. And especially when your downside risk is no more than 2% or less of your brokerage account capital. All right, that's a game changer. So let me explain another way. To keep things simple, price in any market goes up or down based on where the demand is, right? So if there's more demand for something, then naturally price goes up, right? And if there's less demand, then price goes down. Now, keep in mind that demand always leads price. Wherever demand is going, whether up or down, price ultimately follows. So remember, as we discussed before, this means demand is a leading indicator of where price is going next, as opposed to all the traditional lagging indicators that can never give you an accurate or reliable indication of where price is going next because they're inherently limited and will ultimately provide you with a hit or miss inconsistent experience. But with a real-time demand indicator, you now have a reliable leading indicator that provides you with a level of certainty that you've never had before. Now, with the financial markets in particular, due to the hundreds of thousands of interactions that people all around the world have with the markets on almost a daily basis, this naturally creates a virtually endless situation where the demand is constantly expanding or contracting. And this causes price to constantly fluctuate as it constantly is chasing after where the demand is moving to at each given moment. And this fluctuation creates imbalances all the time between where price is and where the demand is. So this is what causes price itself to endlessly cycle up and down each and every minute of the day as it works to catch up to where the demand shifts moment by moment in the market. Does that make sense, everyone, so far? There's another level of distinction that's important here, by the way, because not all demand imbalances are equal. So think about a rubber band. If you take a rubber band and just hold the two ends without stretching it much, not much is going to happen, right? Because it's not stretched out enough in a significant way. So there's not enough potential energy or force to cause any reliable movement to snap back. But what happens if you pull that rubber band as far apart as it can go? Now there's a much more likelihood that when you release it, it will snap back with a very certain force, right? Certain. Being able to see the level of demand imbalance in the markets is what gives you certainty in either taking a position or passing. So let me show you what I mean. And this is where it gets interesting, because 80 to 90% of the time, the market is like that unstretched rubber band. Price is too close to demand, which also means your level of certainty is too low to entertain a position in the market because there's just not enough potential energy to predict with certainty what will happen. It would be too risky. So you simply choose to pass on those trades. Now, these are trades that traditionally can look good on the surface, right? But you're not realizing, because up until now, you wouldn't have had a way to measure real-time demand. You wouldn't know that there was not enough of an imbalance between price and demand. So eliminating the potential losses and drawdowns are going to be critical. And the only way to do that is by understanding where real-time demand is, right? Because otherwise, you're going to have this inconsistent hit or miss experience. All right. On the other hand, about 10 to 20% of the time, the market is like the stretched out rubber band. Demand moves more quickly and more dramatically than price, like you saw in Tesla, which goes well beyond the normal imbalances that frequently occur. And this is what creates a significant imbalance that represents a very low risk, high probability opportunity to profit from those significant short-term imbalances as price catches back up to where the demand is, enabling an investor to capture the difference as profit along the way. Now, it doesn't have to be 30%. Oftentimes, it's just 2% or 4% or 6 or 7 or 8%. But so they don't have to be very significant necessarily, but you have to be able to see the significant imbalance enough where you know that there's a low risk, high probability opportunity for profit. Okay, that's what we call demand imbalance arbitrage, because we're arbitraging or taking advantage of the difference between those discrepancies, giving an investor an 80 to 90% win rate with an average of 2% or less in downside risk per position. So it dramatically reduces and limits the normal downside risk without limiting the upside profit potential. All right. By the way, this also means that you avoid the common experience of holding on to large drawdowns, right? And that includes being able to accurately predict in a timely manner when and where a significant correction or crash is most likely to occur, and therefore that stressful experience can be avoided as well, like you saw earlier. Okay. By the way, let's quickly cover how to avoid or predict a market crash or correction. Okay, because I think it's a visual reference that's going to be helpful for you. Demand, since it's made up of multiple factors, okay, in fact, 8 major factors that we previously discussed, each of which are identifiable and take time to build. Just like a thunderstorm or hurricane, it takes multiple factors to come together to form the right environment for a storm, right? So I mean, you can't walk under a clear blue sky and have it suddenly start pouring rain on you, right? We would first see clouds rolling in, and they're getting darker, and the temperature changes, the air pressure changes, and so on and so forth, right? So those are identifiable factors that took some time to build. And that makes it a forecastable event, right? And now that means it also gives you time to take the appropriate action so you're not surprised or caught unprepared by it. It's exactly the same in the financial markets. It's just that up until this methodology was developed, there was no way to accurately assess where the actual demand was in real time at any moment. So these things used to always be events that often caught people off guard because they had no way to expect it in a timely manner. Now we do. Okay, because when you can see real time, or when you can see in real time when demand is shifting dramatically down, right, significantly away from price, meaning it's created the perfect environment for price to significantly correct or crash, just like you saw again, an example of Tesla, that's when you know it's time to take defensive action. Unfortunately, here's the thing. This environment usually takes days and even weeks to build. So that's the fortunate part. And that means there's enough time for you to act when it matters most, okay? It's not something that you're going to be caught off guard by. To elaborate, however, I want you to understand that this methodology enables you, but whether you're new or experienced, by the way, this requires no previous background or experience. So it's a total novice, total beginner can come in and come right out of the gate and succeed with this, because you're constantly able to forecast what's going to happen next in any market or time frame with 80 to 90% analysis accuracy. Think of how that affects your psychology when you know that you're right 80 to 90% of the time. You have a very low stress to no stress scenario with low risk factors to be able to engage the market and be profitable. All right. And you're going to be able to filter out 80 to 90% of the trade opportunities that look good on the surface, but are in fact likely to struggle and fail. Okay. So here's something I want you to keep in mind. If you look at this example here, and I want to show you kind of another oversimplified example of the market's recent downturn. And I stress this is an oversimplified example because there's a lot more that goes into producing accurate analysis. But this quick example will at least represent how visually intuitive it is, since what I'm showing you is just the first visual indication that tells me that the market is about to turn significantly downwards. Okay. Again, similar to the example I showed you in Tesla, but once I identify the first indication of the coming downturn, then I'd have to apply the rest of my methodology and analysis process that I have to confirm and validate that indeed this has an 80 to 90% probability of following through, okay? But the rest of my analysis takes 4 to 6 weeks to learn. So obviously I can't go into that here, right? And that's why I'm giving you kind of a small slice of the pie and kind of an oversimplified perspective. Okay, but I want you to notice again the red and green squiggly line below. And again, let's use the laser, okay? This is where you'll see the market topping out, and you can see the shift here down below. Look at how the market, as it comes back up to retest some of these highs up here, you'll see the demand had shifted dramatically back to where it was when it was lower. So that starts to tell you the price is going to be moving back down. And as it moves back down, you'll see demand more rapidly outpacing price and going well beyond previous lows, right? So you're seeing demand is shifting significantly, and that's indicating you're going to have more of a significant reaction to the downside. And if you miss that, you know, you got a second chance here to be paying attention and taking defensive action. For, you know, if you're watching this and you had the analysis model, you'd be able to catch the shift again. Very significant shift. Look at here. Look at where price was here. Okay. Look at where demand was. All right. When it came back to retest that same area, look at the dramatic shift. Okay, in demand. So demand was showing that price was not sustainable. It had to come back and correct to the downside significantly, and that's what created the move that we saw, and that's where we are in the market currently. So do you understand, everybody, how this is a very visually intuitive process that's not overwhelming, right? It's nuanced, right? It's got a lot of moving parts, because this is a process, by the way. I don't want you to make the mistake to think this is just a special software or indicator, because the indicator really is just one aspect of the whole, which is a process. There's a process of interpretation. There's a process of looking at all the different facets of the market to understand, to have a 360-degree view of the market. So you're not looking at it from just one small slice of the pie, right? But so there's a process of analysis, but again, I'm showing you how it's very visually intuitive. It's not anything overly complicated or overwhelming. Okay, so hopefully that makes sense. Let me just look and see if there's any questions here that I can answer. There's nothing. The question is this subjective? There's nothing subjective about what we do. Everything is objective. If it was subjective, you couldn't have an 80-90% win rate and a 12-year track record of doing that, right? So everything that we do is extremely objective, and it is extremely accurate because of the real-time demand focus on that. Does that make sense, guys? And this works for futures. It works on Forex. It works on crypto. It works on stocks. It doesn't matter. Commodities. There isn't anything it doesn't work on. If you can put it up on a price chart, then you're going to be able to do the analysis. Okay. Let me see here, a couple of questions. That process takes time. So how do you trade small? Okay, so actually the process doesn't take a whole lot of time. It takes time to learn up front the process, just like when you're learning a new language, right? And the nuances of the language and how to put together a sentence structure and all that stuff. Once you learn the process, it literally takes you, minutes and under a minute to even look at something and quickly assess where the real-time demand is, because you'll be able to have applied the process the way it's meant to be applied. It becomes second nature, right? Anything you learn up front is going to seem, harder than it really is. And it's just like learning how to use a smartphone or a computer for the very first time. It feels intimidating. It feels like it's complicated. It feels like it's overwhelming. And then you realize, oh no, there's some very basic functions that I use all the time, and it's very simple and straightforward, right? It's not at all what it seems initially until you get into it. Okay. So yes, it works in all markets. As I'm reading some of the questions, let's see here. Let me look at if I've missed anyone's comment or question here. Oh, don't make the mistake of trying to take my oversimplified example and think that you're going to understand how to apply, the squiggly line to the price down below exactly. That is part of the process, right? So this is just one slice of pie. The intention here isn't to show you the full analysis. It's to show you just the simplicity and the visual intuitive nature of how to apply it. Okay, but there are other nuances that will layer on top of what I've showed you here, so that we're not confusing you. Okay, so let's see here. Got in late. Did you say how you come up with it? So yeah, so I look at the 8 major factors of the supply and demand, which we went over. You should be able to come back and review that in the archive, the recorded version of this presentation. But most people are looking at fundamentals and technical analysis, and so we're looking at way beyond that. So you're not being blindsided by those other factors that are often there that people kind of don't realize is affecting them. Okay. How much weighing does each factor have in forecasting demand? So again, everything's kind of already combined together in the process. So we're getting an aggregate understanding of a combined impact on price, and then we layer on the different interpretive steps of the analysis to help us get the accuracy that we're known for, right? 80-90%. This is not based on AI. It actually, ironically, I've spent a very embarrassing sum of money in the past trying to turn this into an algorithm, trying to use AI, and I learned a very costly lesson. And this is where a lot of you may not realize that when you're depending on robo advisors or AI and machine learning things, what happens is you're not realizing that the market's constantly evolving and changing. And so what you're dealing with is a program that has a set of definitions, and even a learning program and AI. One of the things that computers cannot and will not be doing for a long time is have the ability to interpret context like the human mind interprets context. You and I can look at something, or we will say something like, hey, my nose runs. Oh, the boy runs. Oh, the water runs. Oh, the car runs. Notice I use the word runs in each of those sentences, but the word runs, R-U-N-S, means entirely different things based on the context of each sentence, right? And so now take that and put that in the market, and then on top of that, the market's always evolving. So almost like you're almost creating language all the time, right? That's the language always evolving. So it's next to impossible to have a computer interpret context. So that's where a lot of times, if any of you who've bought, the most cutting edge technology, it works for a little bit and all of a sudden starts to feed on itself, or works inconsistency or not at all, right? And then you're off to version 2.2, 3.0, 4.0, next new thing. So you're still stuck in that endless cycle of the next new thing, right? And so I realized that I'm always going to beat the computer because I can interpret context instantly, whereas the computer, I'm going to have to go reprogram that, and it's a constant update, and it's just next to impossible to keep up with, right? Does that make sense? Hopefully that makes sense to you guys, and that helps you understand that better. Okay. So, I mean, the thing that I want you to realize is, by learning this one skill, right, you're going to have what I call the 4 vital C's for stress-free trading. Okay. And that is, you're going to have clarity. And I mean clarity with total objectivity. So again, you're not going to look at something and have another person look at something. You're both going to see it differently, right? It's like if we both sit in the car and see that there's a quarter tank of gas in the car, and we want to take a 250-mile road trip. We can all agree that a quarter tank of gas will not get us 250 miles. We're going to have to stop and refuel. So that tells us what kind of actions to take, so we're not stuck, right? We're not surprised by a car that stalls all of a sudden. We know, okay, there's not a lot of fuel left. Okay, excuse me. So it's so critical that you guys, when you look at something, that everyone can look at the same thing and agree. Because if you can't agree, you're dealing with subjectivity. If you're dealing with subjectivity, you're going to deal with hit or miss experiences again, right? So having total objectivity is critical to this process, and that's what this is delivering, again, because it's dealing with real-time demand. Okay, so, and that produces consistency. When you have consistency, guess what that leads to? A level of control over both your performance as well as your experience. Many of you don't think about how important your experience needs to be. If you're getting some performance for a while, but the way you're achieving your performance is stressful, it's through low win rates or high win rates, but high risk, one trade can wipe out several trades profits. That's not a true high win rate. That's you're deceiving yourself. You're eventually going to get, a bit, and you're going to get very uncomfortable, and that's going to affect your psychology, right? So the way to not have to sit and wrestle with trade psychology is by having low to no stress. How do you do that? By having consistency and having control. When you have control over your experience as well as your performance outcomes, that changes everything for you. Okay. So, question here says, if it is not subjective, why can we not use AI? Again, because context is the thing that changes, and only the human mind can interpret context. Okay, so the market, as it's changing, there's a context to it that you'll recognize, which is very objective, right? Because of my nose runs, my car runs, the water runs. Those are objective statements, okay? But the word runs is changing. The meaning of it changes based on the sentence. So that's where you have to really recognize that you cannot lean on technology in that regard. Technology can only be so helpful to a point where, for instance, when you want to find get buying signals as an example, it's great. Computers are great for buying signals. The problem is they're not good for telling you whether that buying signal is actually going to work out before you enter or not. You're gonna have to get in and find out whether it works or not. what this analysis structure does is it acts like a risk filter. So you can actually look at any opportunity, any strategy, any buy or sell signal. I've got one client that his wife has a newsletter and he trades for her. And so she gives him the trade alert signals from the newsletter, and he'll overlay the analysis and go, yeah, this guy's saying you should be buying now. Well, I see this as a not a buy, but as a short, and so and he'll see that he gets proven right 80-90% of the time. So it's a risk filter that tells you, do I have as much or more in reward as I'm risking, right, to take a position? And are the odds at least 80-90% in favor of this working out before I even enter and commit to a position? That's really critical, right? So understanding that up front are one of the most major aspects of this, is knowing what to expect before you're committed, so you're not committed and then feeling stuck, right? So if you know that there's the odds here are about 60 or 70%, well, you know that 30 to 40% of the time you're going to have a struggle on your hands. Well, do you really want to be struggling 30 to 40% of the time? How is that going to affect your psychology? Again, we go back to controlling your experience. So there's a wisdom to applying this. So that's where you can forecast, you can see where the real-time demand is, and it's the difference between having a kind of a rubber band that's not much stretched versus one that's really stretched out. So you want to deal with the ones that are really stretched out, between where there's a significant imbalance between price and demand, so that you're able to take very confident, very consistent, very controlled actions that are right 80-90% of the time. Does that make sense? Of course, all of that is going to lead to confidence, right? That's what we want, is confidence. You want to go into the market and be confident with your decisions, with your analysis, right? And that comes from having certainty. What kind of certainty? 80-90% level of certainty. Okay. So does that make sense? I teach people how to go fish for themselves. I don't feed people fish. I don't provide like a text alert service for traders and things like that. And the reason for that is because once I start doing the work for everyone, now we suddenly create a focal point where the market and like an institution or someone can come in and manipulate that, right? Because they know exactly what you're about to do, and they can trade against you, right? So in fact, many of you don't realize, if you read, most people don't read the risk disclosure statement from the broker, but the broker will tell you right up front that that they'll often take the trade opposite yours. Think about that. Okay. In the risk disclosure statement, they're telling you they're often going to trade against you, right? They're being upfront about it. What do you think that means? Why would they do that, right? Think about that, ponder that. So really, it's important for you to really understand where the market gets manipulated, how it gets manipulated, and so what causes those, so that you can be outside of that. You're not being affected by it. So those are the things that are used to be left to where, well, I've got no control over that. Now you do have control over it, right? So this experience of hit or miss inconsistency no longer has to be part of your experience. I use this on NinjaTrader, because NinjaTrader is free to use for analysis all the time, unless you want to trade through the charts. Then they have like a lifetime license, like $1,200, something very reasonable. They have great support. So it's a very short learning curve. But you can execute your trades on TradeStation or MT4 or any broker platform that you use. Basically, you can trade through whoever you want. But the analysis is done on NinjaTrader, and I do that so I can keep everything secure and keep everything consistent for everybody, so we have a consistent experience. Okay, because different programming languages will affect things differently, and so we want to have a consistency of output as well. So again, our hallmark is consistency. We're known for consistency. That is what my whole reputation is built on, is consistency. Because without consistency, you've got nothing, right? At the end of the day, it all depends on that, right? So clarity, consistency, control, confidence, right? That's kind of your four-legged stool that's really important to have in your corner, right? So if you're committed to transforming your experience in the markets with objective clarity, and you want to experience consistent performance results month after month, having confidence, because you're forecasting with 80 to 90% analysis accuracy. Let me reread that again. Having confidence because you're forecasting with 80 to 90% analysis accuracy. Getting rid of the fear, the doubt, the second guessing of yourself, and the stress that comes with that because of the analysis accuracy again, right? And eliminating large drawdowns and eliminating the need to take big risks. That all goes away, okay? Just reading here a couple comments. Yes, there is a free version of NinjaTrader that you can work and works just fine, and that's why I like it, because it doesn't add a burden or extra burden or overhead to people. Okay, again, unless you want to trade right off the chart itself, right? And then you want accelerated financial goal. You are accelerating your financial goals with unparalleled control over your trading experience and outcomes. Again, when you have a frequent interaction with the markets where you're right 80-90% of the time, it's the consistency that compounds your account and allows you to build your account in a meaningful way. Does that make sense, everybody? That is the thing that I want you to really grasp. Okay. I've looked into other trading software, and I don't have any plans to make have the analysis work through that. But there's no need to, because again, NinjaTrader is free. And so, but if I will say, guys, if some of those things are a serious consideration, you want to think about trading should not be something you come to because you need it. I want to caution you, and I want to warn everybody something. A lot of people will come to the markets looking to make up for financial losses. There's pressure, there's anxiety. I can tell you, even with a methodology like mine, I have seen grown, successful men and women who will come to me, and they'll all of a sudden turn into a 16-year-old who just got a driver's license and daddy just bought them a brand new Lamborghini. I want you to think about the combination of those two. 16-year-old just got a driver's license, got a brand new Lamborghini. That's not a very good combination, is it? Well, we as adults can revert into that mental state when we're under pressure, and we've got something like this, we become a little bit intoxicated by it. And it's very dangerous. And in fact, I've not set myself up to work with the masses. I've limited myself. I have a mini course I'll give you access to here. It's a free mini course to learn all about the details of demand and balance arbitrage. I'll give that to you in just a second. But after you go through the course, the training, if it's something you want to pursue, I've got some requirements. There's an application, and there's an honest to God evaluation. Make sure this is a good fit. Make sure that there's no personality conflicts or issues in your life that would prevent you from succeeding. Because I look for concerning signals from people where they're not in a good situation. And so trading is not an ideal business for people who need to make it happen. It's good. It's a great business for when you are doing fine, but you want to enhance your life. You want to do better. So it's always, and I'm just telling you the honest truth, right? I don't want to disappoint you, and I don't want you to have someone disappoint you and exploit you, and then you're off going, oh, I'm holding an empty bag. There's a lot of great, marketing, a lot of great promises out there, but here's the problem. Number one, you have to have something is consistent and reliable and has a track record of being consistent. And so that's what I'm offering. But then on top of that, you have to come with a situation that is feasible and responsible to be involved in trading. Okay. So I want you guys to really think about, if this is something you really need to do, then you probably should be looking at something else that's going to be a little more stable and won't have the emotions potentially there, and so that you have a lot more control and grasp over in terms of a business that's tangible, brick and mortar, whether it's like real estate or even like buying and selling things at wholesale, things like that. But you look at things that that you can really you could do that don't have to have a whole lot of psychological impact on what you're doing. Okay, trading should be something that you come to that you can enhance. All right, so really take that to heart. But if you want the free mini course on demand and balance arbitrage, I just put it up on your screen now. You can go to marketforecastingacademy.com. And at marketforecastingacademy.com, you will be able to access that free mini course. It'll deep dive into everything, all the details you want to know about demand and balance arbitrage and market vulnerability analysis. And you get to really learn all you want to learn about this, and you get to experience the what others have experienced. You'll be able to read through experiences that the clients have had over the years. You'll be able to see a lot of proof elements, all the evidence that you're looking for. Everything you need is going to be there, and it answers 99% of all the questions I've ever been asked in all these years. So really take that to heart. I only take people who are taking a very responsible approach to this and are in a position where they can where this makes sense for them, because I will not be part of someone's self-sabotaging path. I don't want to have that on my conscience, and so I'm very careful. And in the last 10 plus years now, almost 12 years, I guess, of doing this, I don't have hundreds of clients. I have in our private group, there's less than 200 clients in there all time. This is not current. All time. I only take a number of people a year. I never take more than what I know I can handle and can serve with my heart, and make sure that this is appropriate for people. In terms of cost, the cost is based on the time and the commitment and what particular pathway a person's taking. So there's different options there. So that's why it takes also an evaluation to kind of see what's appropriate for you, what you need, what you require. It's very customized, and that's why if you look me up, you'll see I just don't have people complaining that I didn't deliver on my promise. That's impossible. That's like going to pilot school, and complaining they didn't teach you how to fly an airplane. There's no way. You're going to come to me, and you're going to learn this, and there's no hoping and trying. It's you're going to do it. Okay, there's no such thing as I'm going to try this and I hope it'll work, or I'll try this and see if it works for me. There's no such thing. You either do it or you don't do it. You come and you want to learn how to fly an aircraft. You sign up for pilot school. At the end of pilot school, you're going to learn how to take off and land successfully, make a successful, stable career out of it. This is that kind of a thing, right? So anyway, the mini training is free, but that educates you on everything that we do and provide. And if you want to enter into our paid program, which is a mentoring and training program, we believe in mentoring. We don't believe in home study courses. Guys, I can make a lot of money, way more money, if I just let this go and just said, let's just turn this into a home study course and give access to a bunch of people. I can make millions on that. But that's not where I am in my life, and that's not where my head's at, and that's not where my heart's at, and that's not what even set this off. I didn't do this to teach. I did this for myself. I accomplished what I wanted to accomplish, and then I enjoyed my time freedom. And then, being a young man, when people say, "Hey, would you be willing to teach me?" and having experience teaching in the past, I know how rewarding that is. It's a great way to fill up your time, and it's a great way to make extra money leveraging success and helping other people come right out of the gate and succeed, rather than floundering and starting and stopping and struggling and striving. So it's a beautiful and very rewarding thing to be able to help others, and it's nice that people want to acknowledge that value. And who wouldn't want to make extra money doing something that's really rewarding and personally fulfilling, leveraging their success? It just makes sense. So the name of the program is Demand and Balance Arbitrage. That's the approach. All right, but you can go to marketforecastingacademy.com. All right, again, marketforecastingacademy.com will get you there. The link was just put in your chat box. You can click on the link in the chat box right now. That will take you there. Marketforecastingacademy.com. So that is pretty much it for my presentation. you guys have any other questions, I'm happy to answer them. Again, go to marketforecastingacademy.com and you can get those answered there. Other than that, let me know if there's anything else I could answer for you before my time is completely up. Looks like I think I got everybody here. Yeah. Let me make sure I didn't forget anybody. Didn't leave anyone. Oh, let's see. I appreciate it. Hey, Mike. Good to see you. Thank you. You're very welcome, Bobby. Thank you. And let's see here. Yep. I think I answered all of the questions. Yeah, this is, again, just to be clear, yeah, this is about you learning how to do something for yourself. Because when you're in control, guys, it's nobody can take that away from you. When you have a skill, people can't take away a skill from you. People can take away an economy from you. People can take away your geography, right? You can have problems that impact geography, economy, but when you have the skill set, you just need an reliable internet connection. Gosh, you can be on the moon, right? And you have the ability to operate in the heartbeat of all economic activity, which is the markets, the financial markets. That's where all the big elite investors are, and everyone who's anyone, that's where they go to. They go to the capital markets. So what time frame? This works on minute charts, hourly charts, daily charts, weekly charts. It doesn't really matter if you're a position trader, swing trader, intraday trader. But let me caution you, we're not day trading because that's speculative. We don't speculate. We're investing in these little short cycles of significant imbalances between price and demand. So that's our focus, and that's what keeps it very consistent, very reliable, very dependable approach. Okay. Yeah, I appreciate your thank you, and I appreciate your comments. This is awesome. Yeah, again, marketforecastingacademy.com. You get all the information there. I look forward to meeting those who come to the other side and apply, and the evaluation is directly with me. This is my life's work. I have fun with this. I'm building a family of people around me. It's amazing. Frequently we have clients come over to our house and hang out for a weekend or a week. I've got one right now with his daughter that's hanging out over here. It's good fun, and I love it. Oh, you missed my answer. This works. Yes, it works free on yeah. There's the analysis. You can do the analysis on NinjaTrader. NinjaTrader is free. You don't have to buy NinjaTrader to use it. So and it has a very short learning curve. It's easy to learn. It's a professional level charting platform, and they have great customer service, and it's a versatile platform that you can use for anything. So yeah, you're welcome. So thanks for joining me, guys. That's it. I'm Roger Khoury from Market Forecasting Academy, and I look forward to meeting those who come through.